Now, in a difficult stock market, my next guest thinks there are growth opportunities in the LED lighting industry. Here to illuminate us on that segment of the market and more, we've got a veteran growth investor, Louis Navellier. He manages $2.5 billion as founder and chief investment officer of Navellier Associates. He is also the author of the Blue Chip Growth newsletter, and he joins us from West Palm Beach, Florida. Louis Navellier, welcome to Bloomberg.
It's great to be here.
Louis, paint the picture for the LED industry. We're talking about companies that are going to benefit from a big shift in the way people light their businesses as well as light their homes.
Well, first of all, what happened is the whole industry overreacted because there was a report out of Taiwan that orders were starting to moderate. So they really punished Cree and some others, and of course Cree's sales guidance disappointed Wall Street, even though they're still very strong. So Cree, Axion, Vico Instruments all got spanked, for lack of a better word. Now they're just great short-term buys. They're going to have stunning sales and earnings growth. So I'm very positive on this industry. You know, LED lights are invading cars, they're in boats, they're in hotel lobbies, they're obviously in the big LCD televisions. They're not going away.
Now, Louis Navellier, when you look at the LED technology, these are companies that are making the machinery to actually create LEDs, right? I mean, they don't make the actual bulbs, the lights themselves.
Correct. That's correct. But it gets better and better all the time. And you know, if you buy LED bulbs, you have to have your own wiring and everything. They require their own dimmers and things. So the business is very healthy right now.
And do you think that we're going to see an expansion in industrial uses for LED? I mean, we're going to talk about televisions, but things like the runway lights for airports or indeed for construction sites.
It's really more of an environmental push from the government as they mandate you know, more efficient lighting and lower energy usage. It's going to happen naturally, but I think it's really more the private sector right now and all the new technologies.
All right, so you like the shares of Cree, you also like Axtron. Would you be buying them all now?
Absolutely, because they all pulled back in the last couple of weeks. I think they're phenomenal short-term buys.
All right, phenomenal short-term buys. Turn your attention to maybe some of the users of LED technology. That would be the automotive industry. I know you've been looking at the shares of Ford Motor. Do you like Ford now?
Very much so. You know, GM sales were actually down last month if you exclude fleet sales. So, and everybody's still kind of trying to figure out why Whitaker left. But the bottom line is I'm not sure that GM can cope with that 35.5 mile per gallon fuel standard they have to abide by 2016. They just don't make money on small vehicles. So Ford is better positioned. You know, it's more of a world manufacturer. They make money in small cars, big cars. They're better positioned no matter which way the market goes, and they're also you know, profiting from Chrysler and GM's woes.
All right, so you like the shares of Ford. What about an engine maker, Cummins? Is that a bet on emerging markets as well as growth, let's say, in North America?
Well, it's a lot of things. First of all the diesel engines are now much more efficient, and you know, they get the ammonia injection stuff in the trucks and things. But Cummins is doing a lot of business internationally, selling to these huge diesel power plants that go in a lot of emerging markets, and it's really more of an emerging market story as well as efficient diesel story.
Louis, it sounds as if you're upbeat about global economic growth. Are you concerned about any slowdown?
It is slowing down, but it's still going to be one of the best years for economic growth worldwide because of a growing middle class in Asia, in Latin America, India, and some other countries. We in the United States are definitely the lagger. That trade deficit number we had last week was devastating. Not only did it gap up to one of the highest levels in a year and a half, but our exports actually fell. Now, I'm foreseeing a much weaker dollar here,